Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you live from the CNBC-TV18 Motilal Oswal studios. Last day, and thank God it's a Friday. It's been a long week. Markets, of course, have done very well. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, good morning.
Long week, but a good one, right?
Good one, yeah.
Yeah, very good one. And even yesterday in the last 1 hour, courtesy perhaps the expiry, but the markets did spike up.
Well, that's right. The Nifty is, done pretty well this week. I think, 3 out of the 4 sessions were in the green. And the Nifty Bank on a winning streak.
Yeah.
Been a while since we said that.
Yeah, 12 days now. On
10
the
days.
drop. So let's hope it's 13. Is a bit of a tricky number. All right, let's take it from the top. You've got, what, US equities, which have rallied once again. So it was that one-day blip, right, which we saw yesterday. And we were talking about that. Usually on the day of the decision and the day after, T+1, T+2, things are looking very different because on that day, there is a Fed decision, there's a bit of positioning, etc., which has to be unbound and all kinds of things. So this is the close last night, 0.5%, 0.94. By the way, the S&P 500, the Nasdaq and the Russell 2000 all hit new all-time highs last night. Now, macro data, by the way, was good. So you had lower than expected jobless claims. And I think the drop in jobless claims is the largest in the last 4 years. And of course, there was a big jump in the Philly Fed Manufacturing Index, and that's at the highest level since January. So you got 2 solid macro data points, which I think helped. So basically, the US 10-year Treasury yield went up about 2 basis points or so. Not very large, but we are at about 4.11. Dollar index was up 0.48. We're back about 97, 97.34 around is where we trade. Today, all eyes on the Bank of Japan meeting. There's no US data per se. Bank of Japan meeting decision should come out in the morning in the first 1.5 hours. No big data point out of the US except the fact that its futures and options expiry there and the large volumes, etc., get transacted. Fed is out of the blackout period, the Federal Reserve. And the only reason I'm mentioning that is because perhaps you will hear from Trump appointee Fed Governor Stephen Miran, who is the only one on that FOMC who said, well, we should cut 50 basis points. And will he come out strongly in a way? I think it'll be interesting to see. I mean, others, of course, also. But I think this one is the one where there'll be maximum amount of focus because he kind of sort of represents Trump's demand that the Fed lower faster and more. Now, Trump, of course, also had something to say about the Russian war and what's happening there. So he said, well, Vladimir Putin, the Russian president, let me down. That's a quote. He said allies must stop buying oil and, a little bit about the tariffs he's imposed on India as well. Now, I don't usually mention single stocks in the US in terms of what has happened, but really big moves and all in areas which are relevant for us as well. So NVIDIA announced a $5 billion deal with Intel. And the stock jumped. NVIDIA was up 3.5%. Do we have the price? Yeah. Do we have the price? NVIDIA 3.5% higher. Intel was up 23%. Okay, I don't think we have the price. We had Novo Nordisk, which was up 6%. Big jump there. That announced positive trial results from their anti-obesity pills. Remember, so far, stuff like Mounjaro, Ozempic, etc., you got to take shots. But now we're talking about pills. Again, implications here. Novo was up 6%. And there was a company called ETNB, again, a small pharma company. Roche is acquiring it. Stock went up 85%. After the bell, you also had the old FedEx, which was up 7%, and they basically reinstated their earlier guidance, essentially meaning that they're now expecting better earnings compared to what they put out earlier. Okay, now let's just quickly time the levels here. We've had a good run, very good run, 1,000 points off the lows of 24,400 to where we left off yesterday. The next stop in that sense for the market is the high of 25,669. So that's the immediate stop. It's the second level we put out yesterday, which, of course, after the market crossed the first one yesterday, this becomes the immediate resistance point. Support is 25,210, which is the 40-hourly average, which continues to be dragged higher, pulled higher as the market has inched up. Bank Nifty, 12 straight sessions, positive closes, no signs of a reversal yet. Here, resistance is at the high of 56,156. Again, not very far away, 1.5%, 2% away. And for the Nifty Bank, the support is, again, the 40-hourly exponential average, which is 55,177. So, pretty good going. And we're inching closer and closer. And yesterday was a case in point, right? The Nifty really ramped up. It was not doing all that great. But starting about 2:30, from 2:30 to 3:30, the Nifty moved up 100 points. Nifty Bank rallied from 2:30. Mid-cap index, of course, the bottom was around, 1 o'clock earlier. So, that tendency to try and look for dips to buy, I think at the margin that is starting to come back. I don't want to jinx it, but the chorus seems to be growing a little bit, that maybe new highs by Diwali. So we'll see. It's not very far away. I think about 3.5% from where we stand. GIFT Nifty will give you a quick sense of how we like it to start. We'll pick it up from there. 40-odd points lower is the setup. Nigel is standing by with the F&O stats right now. Nigel, over to you.
Well, Prashant, over the last few days, if you buy the dip, you did make money. And, let's see whether or not that plays out, because after a while, the GIFT Nifty is suggesting that we pull back 40, 50 points or thereabouts. And there are two big points that are playing out for the Indian markets. One is the institutional buy numbers. Yesterday, both of them were on the right side. You had more than 3,500 crores of net buy number coming in from institutions. Point number one. Point number two, the short covering does continue. And the FIs, they've aggressively net short in the system. And those shorts are gradually getting covered. Even yesterday's trading session, 6,200 contracts were covered on the short side. But keep in mind, even after this sort of a short covering, they're still at around 86% on the short side. And just take a look at this. We're bounced 1,000 points from the recent low on the Nifty. And we make this point, right? When the FIs get aggressively net short, don't get nervous. In fact, that could be a blessing in disguise. And that could provide that much-awaited short covering bounce. That's precisely what's happened. From around 1.9 lakh contracts on the short side, just take a look at it. In the last few trading sessions, it's down to around 1.5 lakh contracts, telling you the power of short covering and the way the FIs have got stuck on the wrong side. And in yesterday's trade, it was pretty clear, right? In the live market indicator, you do have the open interest. And on the Nifty Bank, that's where bulk of the shorts were getting built in. And now they are scampering for cover. Even in yesterday's trade, the bigger short covering bounce had come in on the Nifty Bank. And that's what's caused the Nifty Bank to move to a 12-session winning streak, which we haven't seen in a while. So that one's, got its rhythm back. And that's good news for the markets on the whole. The PCR a few sessions ago had gone to around 1.35 odd. That's cooled off to around 1.16. Remember, when it goes to around it's cooled off to around 1.16. When it goes to around 1.6, that's where you see the markets get a little bit overbought. So we're a distance away from those levels. PCR has cooled down. And just take a look at it. The calls as well as the puts, there is equal amount of addition on both the sides. So on the call side, we had a good amount of open interest build up, both at the 25,500 call, 25,450 call, while on the downside, going by the put writing as well, we get straight to the levels. So going by the options here, the 25,250 mark, that's the important mark. You don't want to breach this on the downside. But I think the bears will really want to defend this. The 25,500, 25,500 and 50 mark. That's going to be extremely important level. And that range is something that the bears will be looking to defend. Getting to the other stocks that I'm looking at, you have the Nifty Bank that's found its way. Reliance Industries, that's at a very, very crucial juncture. You need to get it past that, 1,440 odd level. That's the one that could lead the way actually from here on. So I'll be keeping an eye out on the big boy Reliance Industries. Besides that, a few stocks that we'll be looking at, the ones that are moving in and out of the F&O ban. HFCL, that's the one that's moved into the F&O ban. So we'll keep an eye out on that stock. While yesterday, late in trade, I told you that Oracle could be the stock that comes out of the F&O ban. And that's precisely what's happened. So that's another stock that we'll be looking at. And keep an eye out on RBL Bank. There's a high possibility that that one could be making its way out of the F&O ban. It appears that the shorts are getting nervous on that particular stock. So that's an important stock, not just for today, but for the next few trading sessions. That's the one I'll be looking at. And besides that, Adani Group companies, some relief coming in there in the Hindenburg case from SEBI. They've got a clean sheet, so those stocks could be active. And the other one during the day will be Vodafone, because there is a Supreme Court hearing today. So those are the stocks that we'll be looking at.
Indeed, and the other big one to watch on the global front will be a potential meeting between Trump and Xi Jinping. So let's see whether we get any more. We seem to have got a framework deal on TikTok, but whether we get any actual details on US-China trade deal. But let's, break down the global markets and the cues for the Indian markets. Jeffrey Dennis, independent emerging market commentator, is now joining us on the show. Jeffrey, thank you very much for joining in. Another day, new highs, and this time all four indices scaling record highs on Wall Street. The Russell 2000, best levels since November of 2021, 2.5% higher. So first, the first question is, for how long does the euphoria last in the US markets? Can it sustain from here on? And two, yesterday we saw the bond yields go up despite that Fed rate cut. What does that tell you?
Well, first of all, I think the euphoria can continue for a while. I certainly think there are valuation concerns, and of course there are concentration concerns about the where the major part of the rally is coming from, which is technology and AI in particular. But I think the policy mix we're seeing now at the moment, with the Fed starting to cut rates and suggesting that it may cut more now than they had anticipated in the June dot plot, is all very supportive, as long as inflation doesn't run out of control to the upside. So I think, as ever, it'll be choppy. I don't think it's going to be a straight line, but I don't see the case right now for a sharp sell-off in the market at this point. On the bond yields, the initial take, of course, after the Fed announcement was that bond yields came down. 10 years briefly breached below the 4% level, and they've rallied since. And I think that's simply a realization that there's a bit of an inconsistency between the Fed now calling for more rate cuts in the dot plot, and on the other hand, heighten a rise in their middle GDP forecast, and also the actual rise in inflation. So I think people are worried now that if the Fed is going to get aggressive here, as we go through the next year and a quarter, let's say, perhaps inflation isn't going to be so benign as everybody would have hoped. And I think that's explaining partly why the yield curve, why the long-term bond has moved up in terms of yield.
Yeah, Jeffrey, but data is pretty strong as well, right? And it's strong till it's strong. And there are some who very strongly believe the data is rolling over, actually. This is the last of the hurrah, but, lower jobless claims, big drop there. Philly Fed manufacturing index, earnings growth has been pretty strong in the US. So, yeah, I mean, it's looking strong overall is what I'm saying, basically, for the US.
Well, I think it's fair to say the GDP number in the third quarter will be quite decent, and certainly would not suggest the Fed should start to panic in terms of interest rate cuts. And I think they go slow. The labor market is almost certainly weakening. The jobless claims a week ago were distorted upwards by a couple of factors, apparently. And maybe we're just getting a bit of a correction there in the right direction this time. But at the end of the day, payroll employment is basically stalled out. The unemployment rate's ticking up. And so the labor market is weak. And the Fed has to keep an eye on that, even though you're seeing the components of GDP growth, consumer spending, particularly investment, being pretty strong. Now, what's interesting, I think, about this as an economist, which is what I am, is the labor market is normally a lagging indicator, whereas at the moment it looks like the biggest warning flag we've got on the economy is, in fact, the labor market. So that's the puzzle we've also got to sort out. Economy's okay for now. The labor market must be watched and is clearly at some risk of stalling completely, and are seeing a reasonable increase in the unemployment rate.
Hi, Jeffrey. Good to see you, Ben, this morning. Because of this Fed rate cut, you could continue to see some kind of weakness possibly on the dollar index. And we've seen the dollar index is struggling to get past that 98-odd mark as well, just in the near term. Given the kind of weakness you've seen in the dollar index, how would you position yourself to global equities? The emerging market, MSA emerging market, that's done a big outperformance in comparison to the developed markets. Do you believe emerging markets will continue to lead the way? And the Indian markets, which really haven't moved in step, do you think it's time for the Indian markets as well to keep pace or maybe outperform?
I do think the emerging markets are going to continue to do well because, as I say, with the Fed seemingly now wanting to cut rates twice more over the rest of the year, twice more in 2026, despite a decent economy and some uptick in inflation, and inflation would suggest they're taking a little bit of a gamble here. We may be seeing the beginnings of the politicization, if you like, of the FOMC, but we'll see if that's true over the next few meetings. But all of that is why the dollar slipped yesterday, although it did rally a little bit today, Thursday, in the US. But I see the dollar going weaker still because I think that's what the policy framework is giving us. And in that event, I think EM continues to do well. We've just broken on Thursday a 9-day winning streak for EM when they were up 6.8% in dollar terms over those 9 days. And I think that winning streak will eventually resume once again. The gap versus DM is about 1,000 basis points for the year. Now, where do we put India in this? India's been very frustrating. I think there's some great things about India. The growth story, the room potentially for further rate cuts, the simplification of the GST, the drop in oil prices. Maybe eventually we're going to stagger towards a US-India tariff agreement that brings the tariffs down. But I think at the moment, what people are looking at is they like what they see in China. I'm not sure I really agree. Market's cheaper, hasn't done well until this year, really beginning to catch up. And some measures taken by the Chinese authorities. So I think eventually the Chinese economy will be seen for what it is, which is a slowdown story with still many, many problems. And that's when people will start to rotate back in towards India. So I'm not sure India is going to be your short-term outperformer, but I certainly think the market goes higher from here over, let's say, the next 12 months.
Jeffrey, great conversation. Thank you very much for joining us. Really appreciate you being here as always. Thank you. I think we're going to just run you through what's coming up here on the program, Interactions. 8:35, we have HP Ranina, Senior Advocate, Supreme Court, and Sanjay Asher of Crawford, Bailey and Company joining us. SEBI has, of course, given a clean chit to the Adani Group in the Hindenburg case. 9 o'clock, we'll be joined by Jay Kale of Elara Capital as Maruti announces new car prices. 9:20, Dheeraj Agarwal of Ambit Investment Managers will be a market master of the day. 9:35, the management of Oil India to discuss the impact of GST rate hike on exploration services. Vivek Sharma of Cohance Life Sciences will be speaking with us at 9:45. So there is, of course, that upsizing a block which happened, large block. Towards the end of the program, it's our special segment, it's the economy. Lata speaks with Priyankar Biswas of JM Financial Institutional Securities and the state of construction companies post the GST cut.
Time to slip into a short break. We've got a lot of stock-specific action in our special top 10 segment. For the time being, I give you a sneak peek. Adani Group stocks, JSW Energy, Ramki Infra, you have John Cockerell India, Texmaco Rail, all of them will be reacting to positive news flow. While you add to the list Cohance and Vare Energies as well. On the flip side, Indian Hotels, Unichem, and one more Vic could be the ones that could come in for some red. Slip into that break, come back, we get into further detail on all of these names.
Good morning. It's a Friday and we look all set to wrap up the third consecutive week of gains. This week, the Nifty and the Mid-Cap Index is up close to about 1.5%. We got a positive handover from Wall Street, record highs, closes for all the key indices, but the picture across Asia right now is mixed. Nikkei is rallying. That's hit a record for the second consecutive session. The BOJ decision is awaited, but the rest of the Asian markets are a bit sideways. Taiwanese markets are up for you on your screen. The Gift Nifty, we'll get that up. Implied open is down close to about 40 odd points. So perhaps some of the exuberance from yesterday in the last 1 hour could get tapered off. But let's talk about stocks. Our entire research team is standing by with CNBC's list of top stocks for the day. And first up, it's Vivek on JSW Energy. Good morning, Vivek.
Well, good morning. Well, two independent and separate news flows that have come in as far as JSW Energy is concerned. Again, the company is going ahead and aggressively adding capacity and, in fact, has gone ahead and preponed its capacity addition target. Now, the first news is the company has gone ahead and entered an agreement with Statkraft IH Holdings. The company will be acquiring 100% equity stake of Taidong Power Generation. Remember, Taidong has a 150 megawatt under construction hydro power project. FY25 revenues for that particular project was at close to 39 crore. Transaction is for an enterprise value of 1,728 crores, taking JSW Energy's total RE portfolio to 30.5 gigawatt. Now, again, an important development, GE Power, again, which is a listed entity, will be demerging the business of manufacturing as well as supplying power boilers. This particular segment will be demerged into JSW Energy. It's not a cash consideration, rather JSW Energy will be issuing shares, 10 equity shares for every 139 shares that investors hold as far as GE Power is concerned. The demerged entity financials at close to 530 crore, constituting approximately 5% of total GE Power's financials. The rationale for this particular deal is JSW Energy wants to enter the boiler pressure parts manufacturing business. Positive development for JSW Energy.
Okay, all right. So we'll keep an eye out on this one as markets open. Vivek, thank you very much for that. Indian Hotels, there's a large transaction there which has been announced. So Indian Hotels getting out of overseas property, and this is a marquee one. Mangalam is here with details. Mangalam, over to you.
That's correct. So Prashant, actually it's not a large transaction that has materialized. It is a large transaction that the possibility of it being materialized was reported, and the company has clarified on that. They've actually clarified on the possible sale of Pierre NYC. Remember, there were reports in the newspaper yesterday that it would be sold for about $2 billion, and the company, when we reached out to them, said no comments. But now they've said and gone ahead and told the exchanges that they don't own the Pierre. They don't have any ownership on that. In fact, they just own the leasehold rights for the hotel, and operations for them continue as usual. So any reports on the other side are all speculative and unconfirmed. So as a result of which, they're basically denying any such possibility, and doing so, they're denying their ownership in their hotel as well. The stock had seen a recovery from the lows yesterday on the basis of this news and the possibility of a loss-making asset going out of their books. But the fact is that that asset wasn't on their books in the first place, as the company is clarified. So any sale or not will not affect the listed entity. So on the back of that, I see a reversal on the recovery that we saw yesterday. To starters, red for Indian Hotels.
Thank you very much for that. Vamakshi is also joining in with some more stocks which are in the news.
Absolutely, Rima. Take a look at Ramki Infra. The stock will be in focus because they've bagged a 2,085 crore HAM project from Hyderabad Metropolitan Water Supply and Sewerage Board. Now, this is for execution under the Godavari Drinking Water Supply Scheme. Now, keep in mind that the order book that the company had stood at 7,650 odd crores, as on June 30th, 2025. So, therefore, this is a huge order, almost amounting to almost 30% of the company's existing order book. Now, the other stock we're watching out for is the name that we don't speak about very often, John Cockerill. Tata Steel has awarded a major contract to this particular counter for push-pull picking line and acid regeneration plant at Jamshedpur. Vadi Energies is the next stock we're watching out for. Its arm Vadi Power will be subscribing to 76% stake of Racemosa Energy for around 53 crores. Now keep in mind that Racemosa Energy is involved in the business of manufacturing of smart meters. Realtel, another order win for this particular counter. They've won an order worth almost 87 crores from Ultratech Cement, and this is for BCFC wagons along with a brake van which will be delivered by March 2026. And lastly, on the flip side, we'll be watching out for one MobiKwik. Not great news coming in for this particular counter, because they've gone ahead and confirmed isolated technical issues did occur on September 11th as well as 12th, leading to certain failed transactions being incorrectly marked as successful, and that has resulted in unauthorized payouts to some merchants. Now, the total financial impact, in their opinion, has been contained and quantified, and an FIR has been filed with local authorities. Arrests have been made, and around 2,000 merchant bank accounts have been frozen. Now, the company has reiterated that this was not a cybersecurity breach, but a limited internal processing error, which has now been fully addressed. So, red on the screen for one MobiKwik.
Okay, all right. Thanks a lot for that, Vamakshi. Let's hop across to Vinny. She's here to tell us about some more stocks that are on the news. Hey, Vinny, morning.
Hi, good morning. So starting with one of these railway companies, we have Texmaco Rail that has also received an order of around 87 crores from Ultratech Cement. This is also for BCFC wagons with brake vans, and this is expected to be delivered by March 2026. So we're expecting a green coming in for the stock here. Cohance, that's the next one that we'll be keeping an eye out on. This is actually in response to the 6 observations that they had received from the US FDA, which was in their Hyderabad branch. Now they're giving a clarification saying that the company has already filed that corrective and preventive action plan that has to be submitted, and they're working with the US FDA in terms of the stipulated time that they should correct these actions. Now, other than that, do not forget this facility doesn't account much in terms of overall consolidated revenues for the company. As of FY25, it was just 2% of their, less than 2% of the revenue, consolidated revenue, and EBITDA contribution was also below that, of below 1%. So not a major impact coming in, but a mild, up move is what we could watch out for, given that there's a clarification coming in. Lastly, Unichem Lab, that's the one that we'll be keeping an eye out on. Red expected here, as they've received a demand notice from European Commission seeking a payment of around 19 million euros, that's 175 crore rupees, in connection with some drug case that was going on for the company. Now, the company will be accounting for around 5.52 million euros that will be provided in the books of accounts in 2025 and 2026. So we could see some bit of that impact coming in overall for the books of the company.
Okay, all right. Thanks a lot for that, Vinny. Well, let's go across to Sudarshan. Adani Group stocks are going to be in focus. Clean sheet coming in from SEBI. Sir, tell us more.
Good morning, Nigel. So all the Adani Group companies will be in focus today because SEBI has come out with the final order in the case related to Adani Group and Hindenburg. And the one headline is SEBI has given clean sheet to Adani Group companies and also to both Gautam Adani and Rajesh Adani. Now, SEBI had proved, so basically Hindenburg had alleged Adi Corp Enterprises and had said that it was used as conduit to route funds from various Adani Group companies to fund Adani Power. So SEBI has probed Hindenburg allegations for any possible violations of SEBI, and also it has probed if listed Adani Group companies made material misrepresentation in financial statements, and another probe was if listed Adani Group companies attempted to circumvent SEBI registration between FY13 to FY21. Now, what does the order say? It says Adi Corp was not a related party of Adani Enterprises, Adani Ports, and say no SEBI rules were violated by Adi Corp. Second, SEBI registrations in effect at time of transactions don't cover transactions between unrelated parties. Third, there is no basis to charge Adani Enterprises, Adani Ports with violations of prohibition of fraudulent and unfair trade practices. Also, manipulative, that there is no allegation of siphoning of the money or diversion of funds that Hindenburg had alleged. So overall, it's a positive outcome from the SEBI related to Adani Group and Hindenburg case.
Appreciate you joining in, sir, and giving us all those details. In fact, we'll take the discussion forward. We'll have Mr. H.P. Ranina, the Senior Advocate of Supreme Court, and Sanjay Ashar of Crawford Bailey, who will be joining in at around 8:35 a.m. to discuss about this SEBI clean sheet in detail. Let's do a quick recap of all the stocks we just discussed. Ones with positive news flow: Adani Group stocks, JSW Energy, Ramkey Infra, John Cockerell, Texmaco Rail, Cohance Life, as well as Wari Energies. While on the negative side, you have Indian Hotels, Unichem Labs, as well as one MobiWick. That's it about the equity markets. Let's hop across to Manisha Gupta. She's joining in to tell us what's going on in the commodity market space. Morning, Manisha.
Morning, and thank you for that, Nigel. Well, I'm looking at mostly a decline coming in for various of these commodities, and I'll start with the crude oil prices, where we are looking at prices actually heading for a second weekly gain, but off its highs. There is a strong statement from the U.S. President Trump saying that he prefers cheaper oil over additional sanctions on Russia. So that kind of takes away the immediate supply disruptions because of Russia sanctions from the market there. Also, the U.S. Fed rate cut by 25 basis points and indications of more rate cuts on the signs of job market weakness is something that the markets are looking at with two coins here. On one side, well, yes, it's positive because you have the weakness in dollar and there is more liquidity available. But on the other side, it does tell you about the weakness in the markets as well. Consumption also in the U.S. markets is lower, as can be seen from the data. The U.S. distillate stockpiles gained up by 4 million barrels just in the previous week itself. So that is something that will keep the prices in check there. But it's not just crude. If you look at the steel rebar futures, they are trading at a one-week lows. Demand worries coming in from China. Copper prices are now declined to a two-week lows as well. If you look at gold prices, we are off by nearly $60 to $70 from the day of the U.S. Fed meeting. There is profit-taking not just in gold, but in silver as well, which has seen a decline of 3% since that U.S. Fed meeting also. So some bit of a profit-taking still continuing in Asia markets for many of these metals.
All right, Manisha, thank you very much for that. So a little bit of profit booking in some of the precious metals like gold. Well, let's just talk about the brokerage calls of the day and lots of movement, single stocks. So take it away.
So I have two companies which are in the focus also on the back of news. So first one in that list is Adani Power. So Morgan Stanley has initiated coverage with an overweight call and target here is 818 per share. It says Adani Power is a good illustration of turnaround in India's corporate history, and it has resolved most regulatory issues and made multiple value-accretive acquisitions. And because of that, it sees strong earnings growth, and that would be driven by timely completion of projects and more PPA wins that company will have going forward, and it forecasts capacity to rise by 2.5 times and EBITDA by 3 times by FY33. Second stock that might be in focus is JSW Energy. MS maintains overweight call with a target price of 659. It says total portfolio of JSW Energy has risen to 30.5 gigawatt and hydropower portfolio has increased to 1.8 gigawatt and it has surpassed medium-term guidance. Jefferies also has come out with a note on JSW Energy. It maintains buy call with a target price of 700. It says company is targeting capacity addition of 4.4 to 4.9 gigawatt in FY26 versus Jefferies' estimate of 3.1 gigawatt. And because of the major capacity addition, it sees an increase in EBITDA by more than 4 times by FY30. So keep an eye on both these names because these two stocks will also be in the focus on the back of news and also because of positive brokerage notes.
All right, Deepan, Sud, thank you very much for that. That's brokerage calls, which we will pay attention to. We'll take a break. We're back. Deepan Mehta with some fundamental stock conversation. Of course, that discussion on the Adani clean chit also coming up in just a bit. Short hit with the Biocon management because there's some positive news flow there. All of this coming up in just 2 minutes.
Welcome back and hope you're having a good morning. Well, let's focus on Biocon. They have secured the US FDA approval for 2 biosimilars. We have Mr. Shreyas Tambe, the CEO and Managing Director at Biocon Biologics, who joins us on the show. Hi, Shreyas. Good to speak to you, and thanks a lot for joining on the show. Before getting to you, we're just going to tell our viewers the 3 big points we're going to focus on. The market size of these 2 biosimilars, how competitive is the market, and finally, when can we expect the launch of these biosimilars? So let's get straight to the action. Shreyas, good to have you on the show. Give us a sense first of the total market size for these 2 biosimilars. If you could give us a rough estimate out there. The estimates that have come in, from various notes are suggesting it's around $4.5 billion, the market size. You can correct us on that. And what is the revenue potential for Biocon? Some are pegging it at around 100 to around $150 million. Your take?
Yeah, thanks first for having me on the show. I think this is a great development that we are sharing with you. It's amongst the several positive developments that we've had over the course of the last 10 months. We've had 4 approvals in the US in the last 10 months, which is unprecedented. So it's a phenomenal achievement both on our scientific capabilities as well as our operations and quality capabilities. But let me answer the 3 questions that you asked in the beginning of this conversation. First up, you are bang on in terms of the market size. It is $4.5 billion just in the US. But it's a very large asset. It has 2 products, one in bone health and the other in the oncology indication. And globally, it's an asset which is over $7 billion. So it's a very sizable asset. We have not seen too much competition, so there aren't too many players so far who've secured approval. Of course, when you have an asset of this kind and size, you expect competition. That's a part of how the market plays out. But we've been very successful in the oncology space in the past. If you've seen, we've had over a fourth of the market in all the products that we've so far commercialized our products in the US. And coming to your third question, which was about when do we expect to launch this product, that's pretty soon. We've seen launches only begin a couple of months ago. And now that we have approval, we should be keeping you posted on how we will bring this product to the market and make things better for patients in the US.
So
good morning. Over the because there are other players who launch this as well. Eventually, there are some 8 players who are going to be there. Is there an estimate broadly, roughly, and we wouldn't hold you to the numbers, but is there a sense of how much will you make off these two products, of these two biosimilars?
We've avoided giving specific guidance on how much you would make, but if you've looked at past to give a good indicator of what it has been for the future, we've had over, this is our 9th product in the US. 3 of them have been approved in the recent past. This is the 5th product that we've got approval in the last 12 months. But if you look at the 3-4 products before that, we've had a more than fair share of the market. There have been more than, so if you say 8 players, then technically we should have more than an eighth of the market share. We've always had more than a fair share. And even if
how many players, Shrihas, are there in these two right now? 8 eventually, but how many are there already?
We see 2 of them who've launched the product so far, to the best of my knowledge. Maybe there's a third, but these are all launches in the last couple of months or 3 months at top. So we expect us to be in the first, if not, the early entrance into this market in the US.
As more players come in, what happens is prices drop precipitously, right? As more and more come in. So is that something you expect?
Again, I say price is an artifact of competition. You will see that. So you're right to that extent. But the assumption that prices fall precipitous is a myth. And for that, we've again looked back at the products we launched in 2018. Those products are still on the market. Innovator still plays in that game. And you have held on to 35 to 40% of the value before patent expiry. So I think this extrapolation is from the small molecules generics world, where you see in the first 10 days, you see 95% of the value erode, which is where the Indian generic industry is very familiar with. But that's not how the biosimilars market behaves. And we've seen that, far more durable in terms of how value is preserved.
Got that. Shreya, just a quick clarification. You said, I think the market opportunity is $7 billion. Is that the number? And you would be potentially the 3rd player to launch.
That's the global opportunity. The US opportunity, I think your colleague was right, it is $4.5 billion thereabouts.
Okay.
And we would be the 3rd or the 4th player in the market at this point.
And any broad timeline of launch and time to peak sales, how long will that take?
For competitive reasons, we've not specifically talked about launch timing because that's not something we want to indicate, but it's eminent given that we have the approval now. Having said that, what should we expect on this? It should be sooner than later. We've entered almost every product that we've got into the market. We've got 2 products this year, and we're looking to bring in 3 products next year. So it's a very, very exciting period.
Okay, all right. Appreciate you joining in, Shreyas. Thanks a lot for giving us a sneak peek into the opportunity. As things unfold, we re-invite you on the show and we get further details as well. Have a good day ahead.
Thank you so much.
All right, well, let's move on then. That's about Biocon. Clearly a big opportunity which should play out in the coming months or coming years. Let's get Deepan Mehta, Director Elixir Equities, who joins us on the show. We also have with us Mr. Sanjay Asher, the Senior Partner at Crawford Bailey, who joins us, as well as Mr. H.P. Ranina, Senior Advocate of the Supreme Court, who joins us to discuss the clean sheet that's been given to the Adani Group. Hi, Mr. Asher. Let me come across to you first. What do you make of this? It's clearly good news for the Adani Group. What's the way ahead?
No, it's certainly a good news, not only for the Adani Group, but for the Indian corporates as well, and for the markets as well, because that reposes confidence in the regulator, in the Indian corporate governance, so on and so forth. So way forward is, yes, at least now the hanging sword on the Adani Group is now put to rest. So I don't think there would be any further investigation or any further scrutiny of all the allegations which Hindenburg had put on the Adani Group. So having said that, Adani Group can now be assured that, look, at least the one which was pending has been put to rest.
Okay, so it's shut the door on any further legal scrutiny. Mr. Ranina, morning. Very simply put, can you explain why SEBI legally has concluded that the transaction didn't qualify as a related party transaction or there were any violations of fraud, etc.? Can you explain simply?
SEBI has gone into the facts of the case. Please understand that SEBI is the final fact-finding authority. And they have gone into all the facts, all the details, they have got the documents, they have heard both parties, and they have come to the conclusion based on facts that there is no allegation, that the allegation made is totally without any substance, and there is no need to say that they have violated the law. Now, this being a question of fact, you cannot go in appeal because no court can decide on a question of fact. They can only go on a question of law. And no question of law is involved anymore. The facts have established that this Adani Group has not done anything which is improper, illegal, or in violation of any rules, regulations, or the law. Now, this being a question of fact, therefore, the matter will now come to an end. Of course, they'll have to report to the Supreme Court because this is a Supreme Court monitored investigation. And the SEBI will now give a report to the Supreme Court based on the factual evidence which they have gathered, and where the conclusion has been reached that there has been no irregularity or there is no illegality committed by the Adani Group. This will be reported and the matter should now be closed.
Mr. Ranina, will it have any bearing on the US indictment against the Adani Group entities? As far as I remember, that was connected to violation of the Foreign Corrupt Practices Act, FCPA, and bribery allegations, etc. Will there be any sort of a bearing, any sort of a connection on that?
Well, the facts gathered by SEBI will be put before the U.S. court, and the American court will take those facts into account and then show that there is not any irregularity, because if there is any irregularity, it would be both under Indian law as well as American law. And if there's no irregularity, then obviously the American court will take cognizance of the facts which have been gathered by SEBI.
Okay. Mr. Asher, what are the implications, from a foreign investor point of view about infusing confidence in the Adani Group? It's not that on account of this allegation, we haven't seen money flowing into the Adani Group entities. For instance, GQG, the Qatar Investment Authority, they made some large investments in the Adani Group entities. But what is your take? Now that we've got this clean sheet from SEBI, what are the stock market implications?
To my mind, yes, it's a positive development and a very positive development for the investors as well. Because after the highest court in the country having requested SEBI to get into deep dive and get into the scrutiny, and after SEBI scrutinizing the entire transactions of the Adani Group, have come to a conclusion. And as Mr. Ranina articulated, that yes, they have got into all the facts, they have got into all the details, and after scrutinizing all the facts, all the information, all the details, they've come to a conclusion that yes, there was no issues on the related party transaction or other transactions, including the shareholding of the Adani Group, which is illegal or which is something which meets more than the eye. So it's a very, very positive development, and the foreign investors surely will have more confidence not only in the Adani Group but in the overall Indian large companies.
Absolutely. Well put, Mr. Asher. I appreciate you joining in, and thank you so much, Mr. Ranina, as well, for joining in and taking us through your quick take on Adani Group getting a clean sheet. Let's go across to Deepan. Deepan, from a stock market perspective, how do you view this? Adani Group stocks clearly will start off quite buoyant this morning. Among the names, what's on your radar? We have a Morgan Stanley note as well. They have initiated coverage on Adani Power, and they are sounding quite optimistic about the prospects. What would be the pick of the pack?
Good morning, and thank you for having me on your show. I think certainly lifts a cloud on the Adani Group companies, and some of the FIIs, especially foreign investors or even some of the more conservative domestic institutional investors who may have been holding on to maybe buying Adani shares because of this ongoing investigation, because of internal reasons, Now, I think that opens the pathway for them to look at Adani in more positive light. So certainly very good news from that point of view. And the management also has been trying to engage and get more and more institutional investors into the company. That's not been the issues with the ownership pattern. And this certainly will help in that particular endeavor. Having said that, I think first the disclosure we and our clients are invested. I think of all the companies, they're still trading at a lot of expensive valuation, but I feel that from a risk return profile and reasonableness of valuation, Adani Ports and SEZ certainly is the most attractive according to us amongst the Adani Group companies. And it's now become a giant in the entire port and logistics industry. And as and when India's trade grows, I think they'll have a bigger part of that particular, entire journey. And also, I think a lot of the new ports which they've acquired, gradually those will start contributing more and more. And it's a great operating leverage business as well. So I think the assets are on the ground. It's a matter of the returns coming through.
Adani Enterprises, though, is much below the pre-Hindenburg price. If you pull up a 5-year chart, around January of 2023, which is when the Hindenburg allocations came to light, the stock was around 3,700, 3,800, and now today the current market price is about 2,400. So that stock has not recovered, while many others, like Adani Ports, for instance, has zoomed past. Pre-Hindenburg, 2.5 years back, the stock was at 700, 800, and now I think it's close to about 1,400. So the others have done well, but I think Adani Enterprises, Adani Green, etc., are still not quite recovered to those levels. Dipan, what about Cohance? That was the stock yesterday. Now, two sets of news, one that formed 483, the 6 observations. But secondly, yesterday the stock was under pressure because of the large supply which took place. But the fact that it got upsized shows the kind of interest in Cohance. I mean, how would you weigh on this particular stock?
See, Rima, first of all, good morning. There's a lot of interest in CDMO companies, and there are certain secular trends and very strong tailwinds helping the industry. And it's one of the clear beneficiaries of China Plus One, and I believe there are certain regulations also in US which kind of benefit Indian CDMO companies. And Cohance and Dishman, Blue Jet, and also there is OneSource. I think these are the companies which are in the investors' focus. Cohance has been a great performer. Again, disclosure, we are invested in the company. But its performance has been erratic, and last few quarters have been a bit disappointing. But I think the future prospects are great because the number of requests for proposals which they are getting, inquiries which they are getting, management has said it has gone up significantly, almost doubled in the past few months or so. So I think corrections, as and when they come in a company like Cohance, I would view them as positive. And I do feel that it's one of the solid players, strong players within the entire CDMO ecosystem with the merger of Cohance and Suven. So very positive on the stock. But these things are part and parcel of the risk factor, these 483 observations. So I think that's one thing that investors have to look out for, and it's definitely a risk factor. But I wouldn't go by just the valuations. I do feel the prospects are great, and I would look at such a company more positively.
Talking about valuations, the question is Urban Company, 25,000 crore in terms of valuation. The top line is, 1,100, 1,200 crore rupees last year. It's just broken even. I mean, what kind of valuations do you play? It's had a solid debut. It followed up with some buying yesterday, up 2%. But at what point, if someone wants to get into Urban Company, what would be an attractive level?
Rima, that's a tough one to answer. But first of all, we have also bought on listing as a measure of disclosure.
Okay.
But I think that, the approach that we are taking is to, just buy a small quantity and just wait and watch and maybe average if the stock price goes lower. See, Urban Company has the benefit of all the great work done by some of the other platform companies, the likes of, say, Paytm or even Swiggy or Zomato. And these companies also got listed with a lot of fanfare. Then there was a correction. We had losses for a few quarters, and now all of these stock prices have zoomed up really well. And within India, I think these entire platform-based businesses are one of the new growth avenues for investors. And losses notwithstanding, I think investors are taking a long-term horizon on such companies and buying into them. And these companies certainly have great opportunity to grow many-fold from here. So in same light also, I think Urban Company should do well. It's a very strong, aggressive management. Excellent business model per se. No parallel as such. So no competition per se. And I think they know the business very well. So it's like a leap of faith you buy it and hold it on for a long period of time, and I think it'll give great returns.
You know, when we spoke to the management, they said last year the total addressable market for home services in India was $59 billion, and they expect that number to rise to $97 billion by 2030. And of that, $10 billion is that InstaHelp, the new segment that they're targeting. And even on Native, it's a very calibrated approach to get into hardware manufacturing. As of now, there are only 2 products, smart locks and water purifiers. As of now, the company doesn't plan to launch more products. They're going to wait, scale this up, get the profitability. So it's a very conscious, calibrated approach. The street seems to like it. Dipan, I request you to just stay on. We will slip into a break on that note. On the other side, we'll also put the spotlight on the big movers of Dalal Street yesterday.
Welcome back. You're tuned in to Bazaar Morning Call. Well, it's that time of the show when Horvus joins us to tell us about all the big movers in trade yesterday, the ones with heavy volumes and possibly delivery-based action as well. Horvus, take it away.
Good morning, Nigel. And, the broader markets have been doing well along with the benchmark indices. But yesterday's session was somewhere where the movers were marked by extremely strong volumes. And you take a look at IRM Energy, was up 20% the day before, added on to gains yesterday, is up now almost 33% in the last 2 trading sessions. And it fell around the last 10 minutes of the trading session. It slipped slightly from the highs of the day. But take a look at the volumes here. They were the highest on record, of course. We had 1.9 crore shares traded on the stock compared to a 20-day average, which is just under 2 lakh shares. And for delivery as well, over 20 lakh shares were marked for delivery, and the 20-day average here is only 50,000. So it shows the kind of volumes with which the stock traded in yesterday's trading session. And and despite this outperformance over the last 2 days, the stock still remains below its IPO price of 505. A new listing, Denta Water and Infra, listed only this year, and a 4th best listing day gains. Gains since listing was up around 11.5% yesterday. In the last 4 trading sessions, the stock has moved up 20%. We had close to 1 crore shares traded yesterday. Of course, again the most since listing. 20-day average here is only 13 lakh shares, and even for delivery, only 10 lakh shares marked for delivery compared to 1 crore shares that were traded. But even then, the quantity is significantly higher than the 20-day average of just under 3 lakh shares. The stock has done well from its IPO price, almost 60% higher from those levels. Now, Newgen Software was higher by around 6 to 7% in the early trading yesterday. It fell off the highs of the day, but the interesting bit is the volumes. Again, yesterday was the first instance in the month of September where more than 10 lakh shares were traded in a day. We had close to 70 lakh shares being traded. The 20-day average is close to 8.5 lakh. And even for the delivery front, only 7 lakh shares were marked for delivery compared to a 20-day average of just over a lakh. And on the levels is closed above its 50-day moving average of around 912. And lastly, Shalimar Paints, we spoke about this on closing bell yesterday. There's the biggest single day gain since December of 23. Volumes the highest since January of 24. 35 lakh shares were traded yesterday. The 20-day average here is only 1.1 lakh shares. Even for the delivery front, 7.5 lakh shares marked for delivery. The 20-day average here is only 60,000 shares, and closed above its 50 DMA. The next on to watch on the upside is the 100-day moving average, which comes up to around 90 rupees. So broader market movers on very, very strong volumes.
Got it. Always a nice, neat list, Horvus. Thanks a lot for that. But Sudarshan's back with more data. He wants to tell us about some major insider trading action that's been reported on the exchanges. Sir, tell us more.
See, some of the interesting insider trades have been reported to exchanges yesterday, and first on the list is Zee Entertainment, where Punit Goenka's wife and son have bought additional shares on September 17. So his wife, Shreyasi Goenka, has bought more than 41,000 shares, and his son, Udyan Goenka, has bought nearly 42,000 shares on September 17. Second stock in the focus is Sonata Software, where its Employee Welfare Trust has bought more than 47,000 shares from September 15 to 17, and now the trust stake has increased to 1.07%. For Selzer Electronics, promoter has sold more than 12,600 shares, and that was done from September 15 to 17. For Choice International, promoter has gone ahead and bought almost 1 lakh shares on September 16. And last on the list is Usha Martin, where promoter has sold more than 2 lakh shares, and that was done on September 17.
Thank you very much for that. Get into a break. On the other side, pre-opening, and we'll also be joined by Sudeep Shah and Mitesh Thakkar for some technical trading ideas. Stay tuned. Welcome back. Awaiting the pre-opening rates, the GIFT Nifty is suggesting a mild downtick, but we've had 2-3 good days on the trot with the Nifty Bank scaling almost to levels of 55,700 plus. Mitesh Thakkar, Sudeep Shah are now joining us on the show. Gentlemen, good morning. Mitesh, let me start with you. If there is a mild gap down, very mild, what would the approach to trade be?
Good morning. So, we've kind of advocated that we might actually head towards 25,500, 550 zones. In the best case scenario, even 25,650, which was where the Nifty had peaked out in June. So I think the uptrend is intact. Now the question is, if we get a gap down, when we should buy? I think a 30-40 point gap down might not interest me, but in case we get an entry around 25,340, 330, which is the level which I'm looking at as the immediate support area. I think maybe 20 points higher than that. I think that will be an entry point. And the idea is that then keep a stop below 25,260 and maintain and hold the Nifty for targets of around 25,500 to begin with, and in a good case scenario, even 25,650.
Got it. Okay, all right. Got that. Good morning, gentlemen. Good to have you all on the show. Sudeep, good to see you. Friday morning. Tell us, what's the trade on the Nifty? Buy the dips on a day-to-day basis has been working out. Now, today we're expecting a bit of a soft start, 50, 60 points down. I think the last time I checked on the GIFT Nifty. Do you think you look to buy into the dip?
Absolutely. Good morning, Nigel. Nigel, see, what we feel is now let the pre-opening get settled, but I feel that it'll get settled somewhere around 25,300, 330 zone. So with supports closer to 25,200, 25,230, I guess this dip could be a good buying opportunity, and playing with the trend will actually help us. So I feel keep a stop near 25,200. On the upside, the first levels in the recovery could be 25,450 followed by 25,600. So dips towards 25,280, 25,300 that can be used to add. And I feel buy on dips should keep working from here on also.
Okay, corrective decline serves as an opportunity for accumulation to buy. That's the advice coming. Let's talk about stocks then. Mitesh, what do you have on your list?
I have a mix of buys and sells, but more stocks on the buying side. The first one is Biocon. Very good pricing action took place in most of the pharma names, and Biocon also had a strong price day. It just needs to get past this 370, 371 level. Yesterday, I think the high was around that. So buy about 371, keep a stop at 364. We will look for a first target of 385 to about 388. Then a buy on KFinTech with a stop at about 1124. Here I would recommend a target of around 1190 in the short term. Also have a buy on Hindustan Zinc. It gave a good breakout a couple of days back, has given a 2-3 day kind of a pullback, gives you a fresh risk reward, good risk reward entry point. So buy around 452 to 450 with a stop at 444. Look for 465 and then 472 as the two target areas. One sell call, that's Asian Paints. Keep a stop about 2501. Look for targets of around 2435.
Okay, got it. All right, Sudeep, what about your picks?
Nigel, two buys, one from the pharma space, one from the auto space. To start with, from the pharma space, the stock is Glenmark Pharma. 2110 is the closing of yesterday. So we feel that there was a decisive move that had happened in the last week. Post that, then there was some consolidation. The stock retested its supports closer to 2030 zone and once again rebounded back yesterday with the pharma rally. So I feel this is one of the stronger stocks out of the pharma pack, and this can move to 2230, 2250 in the coming few weeks. Can be bought with a stop loss at 2050 on the downside. The second from the auto stock list, which has given a breakout yesterday, is Ashok Leyland. Now here also there was a decent breakout above 135, 136 levels. The stock had rallied last week but was not able to close above this 136 mark, 137 mark decisively. Yesterday we saw that, and that was backed by volumes and a rise in open interest. So I feel from here on the stock could do 145, 147 on the upside in the short term, and this can be bought with a stop loss at 133 on the downside.
Got that. Thank you, gentlemen, for joining in. Let's take the discussion forward now on autos. Now, yesterday, Maruti Suzuki announced sizable price reductions across its portfolio. So, entry-level models like Alto, Espresso, Celerio have seen price cuts ranging from 13 to 22%, while even some of the larger models like Brezza, Grand Vitara, the cut in prices is a little more moderate. But as you can see, for Brezza, it stands at close to about 12%. Now, the big question is, will these lower prices on account of this GST pass-through actually stimulate buyers? Maruti Suzuki has been talking about how entry-level mass consumption has been hit. Jay Kale, Executive Vice President Research at Elara Capital, is now joining us on the show. Jay, morning. Thank you very much for joining in. First, give us your comment on the price cuts announced by Maruti, and how does it compare with the other passenger vehicles who've also announced a cut in prices?
Yeah, hi, good morning. So yes, Maruti has cut its prices, passed on the GST benefit, and over and above that also cut its prices, especially for the entry-level models. We have seen entry-level models being under pressure for quite some time now, also because of the affordability issue. So I think this is the right time for the management to kind of spur demand over there and get the first-time buyers back into the market. And what better way to do it during the festive season? So I think, yes, you will have some bit of spurt on the first-time buyers because of this price cut. And that will also lead to better utilization levels for the company, which could cushion any kind of margin impact because of these price cuts that we've seen.
So, Jay, you said that the price cuts are a combination of GST pass-through plus additional discounts. Do we know the extent of the additional discounts that Maruti Suzuki has priced now, and what will be the impact on margins? Will there be any impact, or do you think higher volumes can offset that?
So, broadly, they've cut prices in the range of, on the entry level around 50 to 18% odd types. Because we have to see the base variant versus base variant price cuts and not up to the price cut that they've given in the press release, because that seems to be a little higher. So, around 17-18% broadly, as per our calculations, is the price cut of the entry level like-to-like models. And normally you would have expected around 8 to 10% odd price cut because of the GST benefit. Of course, there will be some tweaks in the discounts as well. Some reduction here or there is what our expectation is. Net, we don't see much of an impact on the margins because of this price cut, as it will be a kind of offset because of better utilization levels if the volumes bounce back.
What were your volume estimates, and have you revised it higher?
Yeah, so we've recently revised our estimates for the entire auto sector in the range of, we've increased our estimates by around 5 to 15% for most of the OEMs. And of course, the incremental delta is coming mainly because of passenger vehicles. We see that incremental delta in growth to be higher for passenger vehicles, followed by two-wheelers.
Okay, and can you, this 5 to 15% increase in volumes for passenger vehicles, can you break that down in terms of which of the companies have seen the maximum increase in volumes? And what about Maruti in particular, especially post these cuts?
No, so the 5 to 15% that I mentioned was the EPS upgrades. The volume upgrades have been in the range of 2 to 4%, more for the passenger vehicle industry than for the two-wheeler industry. And also the EPS upgrade is higher also because we expect a lot of upgrades to happen within the passenger vehicle industry as well. So if someone was going to expected to go for a mid variant, they'll go for a top end variant. So the mix is expected to improve for the industry, which will also lead to higher ASPs as well as margins. And that's why the EPS upgrades are higher than the volume upgrades.
Mm. Jay, I just want to ask you about another stock, Hyundai. If you have a view out there, the reason I asked you this is because around 12 months or so ago, the stock listed. No one was interested. There were various red flags with regard to the big dividend payout to the promoter, the risk of royalty, and various other red flags were pointed out. The stock then came down to, I think, 1,500 rupees odd, but it's making a fresh 52-week high. At current juncture, at around 2,700 rupees, do you think most of the good news is in the price, if you have a view on the stock?
So I think, we don't have it under official coverages yet, but point is that Hyundai is also a beneficiary of the passenger vehicle industry bounce back that we are seeing. It has a slew of launches, its capacity is coming in. So incrementally, things are looking good for Hyundai in terms of both model launch cycle as well as capacity increase. and that is kind of timed well with the GST cut, so to say. So, yeah, things are looking good, but I wouldn't have a target price to as of now to give you.
What would be your top pick in passenger vehicles and then for two-wheelers?
So the top picks are Mahindra, Maruti, and TVS. The preference after the GST cut shifts a little more towards the passenger vehicle industry over two-wheelers, but TVS remains the top picks in two-wheelers.
Okay, and between M&M and Maruti, if you had to pick one?
Well, I think I'd pick both, given that one is a beneficiary. There are substantial volume upgrades likely to be seen in Maruti, and mixed benefit will be seen in Mahindra, where they had a kind of already expectation of 15 to 20% volume growth for them was already built into the estimates.
This Maruti also, there was this launch, right, a couple of days back of Victoris. And I think they've announced a price of about 10 to 17, 18 lakh for the petrol variant. I mean, is that going to be a game changer? Are you expecting this to incrementally add considerably to their volumes? And will it in any way, undermine Grand Vitara?
Yeah, I think whenever such kind of a model is launched, there is a natural cannibalization, and that is expected. But of course, Victoris is going to be sold in Arena channel, Grand Vitara, and the Nexa channel. So to that extent, there will be some bifurcation. But we've seen Victoris features. I think the ADAS level 2. Maruti has gone all hog in terms of giving connected features for this vehicle. They've given the CNG a new design and architecture for the CNG kit as well. So I think pretty good volumes expected from Victoris, and in the mid-size SUV segment, which has led the growth for a few years now. I think this was long pending. Also, we're expecting better margins for Victoris for Maruti. So cannibalization will happen, but net it will improve their mid-size SUV market share in RV.
Appreciate you joining, and Jay, wishing you a good Friday ahead, and we look forward to chatting up with you as things evolve on ground. A lot of excitement post this GST rationalization. Let's see how demand picks up post that.
Right now, all the excitement is, I think, in the Adani Group stocks.
Yeah.
Pull up that pre-opening. Adani Power, 7%. Adani Green, 5%. In the frontline pack, it's Adani Enterprises and Ports racing away with a 3-4% gain. So this clean chit given by by SEBI to the Adani Group has really, lifted the spirits of these stocks.
Since you spoke about Adani, I think let's go across to Sud. He's waiting by to tell us about the Adani Power. There's an initiating coverage out there. Tell us more, Sud.
That's true. So besides the news, Adani Power is also in the focus on the back of positive brokerage notes. So Morgan Stanley has initiated coverage with an overweight call, and target has given is of rupees 818 per share. It says company is a good illustration of turnaround in India's corporate history, and also it has resolved most regulatory issues and made multiple value accretive acquisitions, and it sees strong earnings growth, and that will be driven by timely completion of projects and more PPA wins. So it forecast capacity increased to 2 times and EBITDA increased to 3 times by FY33. So keep an eye on not only Adani Power, but most the Adani Group names on the back of also SEBI's order.
Yeah, it's coming as a huge relief, and you can see that SEBI finding no merit in Hindenburg's allegations of stock manipulation or even certain governance lapses. Let's quickly do a quick recap of the top stocks. Well, of course, all the Adani Group stocks will be on our radar after the SEBI clean chit, but there are new orders for Ramki Infra and Texmaco Rail, so that could keep the stocks in focus. There are other stocks in news like JSW Energy, the clarification coming in from Indian Hotels about the Pierre Hotel in New York, John Cockerell, and the other stocks which are in focus today in news. One MobiKwik, Vari Energy. And not to forget Cohance, a stock which slipped close to about 5-6% yesterday. We should keep that and see the kind of performance today. And finally, Unichem Laboratories.
Okay, all right. Well, let's get Mitesh back on the show. Mitesh, tell us what's your 9-10 call?
I'll go with the buy on Biocon. As I said, I think the stock needs to get past this levels of 371. And once that happens and stays above that, I think, good chance that the stock can head towards 385, 390.
Okay, all right. Mitesh, I wanted your view on Reliance Industries. The markets have seen a good bounce. Reliance Industries has managed to take out that 20 DMA. It's hovering in that vicinity, I think, at around 1,430 is where that 50 and 100 DMA is at. if this one gets its act together and moves closer to its 52-week high, that'll be the additional booster shot that we need. What's your take?
So Nigel, one slightly positive here. One, the stock, had an intermediate high around 1425, 1430 in August, and it needs to clear that. Once it does that, 1460, which was the gap area, should be visited. Above that, I think the all-time highs or the recent 52-week highs can be tested. But for the timing, 1430 and then 1460 are two levels to watch.
Okay. Mitesh, just, some more stocks. You're seeing some buying in Maruti. We were just discussing with Jay Kale about the extent of price cuts, and it's quite steep, especially for the entry level, going up to, 22% for some of the variants. Technically, how is Maruti looking?
Extremely overbought. I think this stock is looking strong. It's at all-time highs, but in the short term, on the hourly charts, 2-hourly charts, extremely overbought because it's rallied from about 12,200 to about 15,800 plus. So I think, I would wait for some consolidation or at least a good pullback if I were to buy a fresh. But if I'm holding, just trail your stop losses to about 15,050 or just 15,000 and then let's see where it goes. Difficult to give targets because the stock is in new highs. But for the timing, the medium-term charts are very good, but the short-term charts are extremely overbought.
Well, looks like, from 15,800 on Maruti, 16,000 could be hit. And for all the concern about slowdown in entry level, the stock is up 47% year to date at a fresh record. There goes the opening bell, and it's a flat opening. The Nifty opens down 5 points at 25,417. So holding on to 25,400 at open. It's a very mild downtick of 12 points, 10 points on the Nifty. The sensex opens lower by close to about 60, 70 odd points. But considering we've had a 1.5% rally in the first 4 days of the trading week, this consolidation and flat opening is par for the course. The advanced decline ratio is firmly in favor of the gaining side. So we pull up the Nifty heat map. It's quite mixed. It's on an even keel now. Equal number of stocks up, equal number of stocks down. But predominantly on the way up, as you can see, it's the Adani Group stocks. Adani Enterprises, Adani Ports, the two which are a part of the Nifty, are racing away. Adani Enterprises up 4 1/4 at 2,500. And as we were earlier pointing out, pre-Hindenburg, that stock used to trade at levels of 3,700, 3,800. So that is one of the Adani Group stocks which hasn't recovered to the pre-Hindenburg levels before all the allegations and investor concerns rose. So that stock is moving up, but you can see bigger, more powerful moves in the rest of the pack too.
Well, that's right. The Adani Group stocks clearly are doing very, very well. Inox Green is another one that's coming on very, very high volumes. I think that one should come up for you on the screen. Massive volumes on that particular name. Let's get that one up. It's up close to around 5%. So big move out there. IRM Energy, Sudarshan had highlighted that stock, about it moving on high volumes yesterday. Today, in fact, that stock has started off on the back foot. It's down close to around 5.5%. Texmaco Rail, that one I think has opened up in the green. They are backed an order worth around 87 crore rupees from Ultratech for wagons and brake vans. So that's why that stock is up and about. The other one that's under some pressure is Indian Hotels, because they've clarified on reports with regard to the hotel that they have in New York. They're saying that they have only leasehold rights and they don't own it. There was some speculation yesterday that they could sell it for a couple of $1 billion. But if it's leased, then they can't sell it. So that stock as well comes on your radar. What else? Ola Electric. That's opened up a little bit softer. It's down close to around 2% or thereabouts. But the Adani Group stocks, they are catching your attention. Big moves is what we're seeing on all of those names. Up and about in today's trading session. So the broader markets are outperforming today. Headline index is taking a bit of a pause. But otherwise, par for the course, one would say. I think Hind Rectifiers, they have gone ahead and they've done some small shopping overseas. If I saw that correctly, they've gone ahead and they bought a company in France, which was in liquidation. Volume's not very, very high. Only 15,000 shares have got traded. But that one as well opening up with a gain of close to around 4% or thereabouts. Well, what else, Rima? Anything else you've spotted?
Well, let's just quickly run through the large cap action then. Adani Enterprises right on top, 5% up, followed by Adani Ports. That's up close to about 2.5%. The picture for autos today is mixed. On the way up, you've got Hero MotoCorp, Maruti Suzuki and Eicher Motors. So these three stocks seeing some buying. Gains are about 0.5 to 1%. But on the way down, M&M is seeing profit booking. It's been one of the biggest winners. Well loved by a lot of investors and funds. And Bajaj Auto is the other stock which is mildly under pressure today. So the picture across autos is mixed, but broadly there is no big stock which is moving up other than the Adani Group. Shriram Finance, HDFC Life, Geo Financial, IndusInd Bank, HUL, NTPC. These are some of the large cap stocks which are opening up in the green on the way down. Eternal is seeing some profit booking. ICICI Bank is subdued. In fact, ICICI Bank is putting pressure on the overall Nifty Bank with a cut of nearly about 1%. That's perhaps the reason why the Nifty Bank is down 100 odd points. HDFC Bank is down about 0.25%. Reliance Industries too is not flat, but with a negative bias. All in all, a very, very quiet day. Let's see whether we manage a positive close by the end. So far this week, it's been a rally of 1.5%. And if it continues like this, we will be on track to close higher for the third consecutive week. Dheeraj Agarwal, Managing Director at Ambit Investment Managers, is now joining in. Dheeraj, morning. Thank you very much for joining in. The consensus seems to be that after a very long stretch of underperformance vis-a-vis emerging markets, no returns for large caps and many mid caps, now is the time. We've got all the raw materials in place, and markets will scale up from here on, move on. The FIs will eventually turn buyers once we get that US-India trade deal. Where do you stand on the market construct from here on for the next 12 months? Are you bullish?
I think next few months I am positively biased. Next 12 months I will reserve my comment at this point of time. And I see a challenge between the macros and the micros at this point. So as you rightly said, macros are still looking good. GDP growth number was outstanding. There is a good possibility that a trade deal will get signed with the US. The GST cuts which the government did should result in some amount of demand revival going into the festival season. But how strong it is, and remember, even after the trade deal with the US, the tariffs will be significantly higher than what it was 4 months ago or 5 months ago. So how do we battle that? How do we manage to grow our exports once again, despite that, into next year? Will determine whether our earnings growth picks up for next financial year or not. So last 4 quarters have been disappointing from earnings growth point of view. Eventually, market will want to see all these macros translate into micro, which is the earnings growth. So jury is still out on that one. So next few months, I'm positive. 12 months, I'm still a little cautious.
Okay, all right. Hi, Dheeraj. Good to see you in. But, earnings in Q2 as well will look a little bit softish, right? You have this adaptation to GST 2.0. So then earnings, we live on hope that Q3 and Q4 will be much better. Is there a possibility earnings actually could disappoint a little bit in comparison to expectations? The scale down expectations is what I'm talking about.
So the current quarter's weak numbers, I think, may not impact the market too much negatively because I think it's a known fact that post the announcement of GST on August 15th and the actual implementation of GST cut in the third week of September, for 2 or 3 weeks, the consumer demand and consumer sales were likely to be muted, right? Because everybody would have waited for the GST cut to filter into the prices before buying the product. So a little bit of weak earnings this quarter, I think, should not matter much. The acid test will be December quarter numbers. December quarter numbers has to show meaningful improvement for the rally to sustain into next year.
Okay. All right. Dheeraj, the next question I have with you is with regard to this new listing, Urban Company. Clearly, there's a big runway ahead. Most of us use their services, and shareholders will be very happy looking at the listing gains. But if you look at it on a forward multiple as well, it's trading at 100 times. What's your view on these names? In the past, Zomato, you were bang on, or Eternal as it's called. Urban Company, do you have a view or any other stocks in this new age theme?
No, so this particular company, I don't have a view. But I think the high valuations will have to be seen in the context of, number one, what is the growth? Second, what is the runway of growth potential? So, you gave the example of Zomato. Zomato, our conviction was that the longevity of growth or the runway of growth is fairly elongated. And unlike the fears which exist in some quarters of the market, that whole segment has almost settled down to be a duopoly right now. And all new competition is finding it difficult to get their foothold in the market, right? So a duopoly with a long runway of growth, visibility, you can justify high multiples or, I mean, in case of low EPS companies, obnoxiously high multiples. But for the others, you'll have to see what is the growth and what is the longevity of growth. Otherwise, it could be a trap, as a general comment.
So for Urban Company, is it the longevity of growth that you're not convinced about? Is it the opportunity? Because unlike an Eternal, this has a monopoly in the business that they operate in.
No, as I said, I haven't studied the company.
Okay,
so
got that. So what else are you extremely convinced or bullish about? What are the themes, the top 2-3 themes?
So, the unique characteristic of the current market is actually themeless. So within every sector, you can find companies which are beating the sector's growth and the market growth, and they're doing well. And within every sector, you can find companies which are laggards, and they're actually struggling. So, and that's what is making investors struggle, that what is the theme? That question everybody is asking, and the answer is there is no theme. It's a true blue bottom-up market. The last time I remember, I mean, we have seen bottom-up markets many times in the past, but the most prolonged one was 94 to 98, 99. 5 years, that time Nifty was not so popular, so I remember the sensex numbers. 5 years sensex oscillated between 2,500 at the low and 4,600 at the high. And it was a true blue stock pickers market. I mean, no theme actually worked. So I'm looking at a very similar environment for the next few years.
So that means a 5-year period of sideways movement, no return on the index, similar to, we've done 1 year so far.
I think my view is next 3 to 4 years, mid-single digit returns at best. But individual stocks can outshine if one picks the companies correctly.
With disclosure, can you talk about any of these stocks? Or give us a hint?
No, I mean, I can give you examples. So I mean, I generally don't recommend stocks on media, but I can give you examples. So let's say, let's say within IT services space, I mean, there are few companies which are still growing earnings at near 20% per annum, whereas most of the mega caps are growing earnings only at 5% per annum now. So the 20% per annum growth companies like Coforge, Persistent, Emphasis, and one has to take a look at the valuations as well, can continue to do significantly better than the companies which are struggling for earnings. And similar trend in the banking or the NBFC space, there are still companies delivering in the NBFC space 25, 27% growth without taking too much of incremental risk on the balance sheet. And they can outshine as compared to the general sector growth, which has now come down to below 10. So I think every sector will have a pyramid like that, and the companies in the growth, like a pyramid, the companies in the growth portion, the numbers are few, which is the characteristic of a sideways market. So very, very careful stock picking is my mantra and my advice.
Okay, all right, Dheeraj, since you're saying the market is not very themeless to a certain extent, you're not very optimistic about double-digit returns, just in the near term. If you're allocating fresh money, between various asset classes, how would you do that? I mean, what would be the broad breakup?
So, because it's still possible to buy bottom-up ideas in the market at this point of time, I wouldn't be significantly underweight equities. I'm still, as an asset class, I'm still very, very positive on gold from a 3-5 year point of view. Everything which is happening globally, whether it is the trade wars, whether it is geopolitics, whether it is bilateral businesses between the multiple countries, which used to happen, let's say, in the 70s and 80s, and then it started becoming more of a unilateral US dollar-driven system. These are tectonic shifts, and these tectonic shifts will continue to benefit gold as an asset class. So apart from reasonably high weight to equities, I would say some allocation to gold in individual investors' portfolio should be there, whether it is 15% or 20% or 10%. It depends a little bit upon individual risk appetites.
Mm-hmm. Okay, all right. What about, on the domestic front, there are various themes that are potential beneficiaries of this GST rationalization. There's autos out there, cement to a certain extent as well, because they hiked prices a little bit. Now they'll pull back prices, but maybe not to the extent that they, had hiked it. So there could be some kind of gain on profitability front. What would be, or the consumption pack? how would you approach it? The GST 2.0 place.
So the most obvious gainer for such a sharp tax cut are usually consumer discretionary, so which includes automobiles, right? Because in small ticket items, let's say soaps and detergents and toothpastes, I don't think that a little bit of price movement here and there will make that much of an impact on demand. But for, let's say, cars and two-wheelers, television and refrigerators, it does make a meaningful impact. And the GST rationalization has been large. It's not a tinkering, it's actually a significant move down, and that should have some positive impact on consumer discretionary demand, including the automobiles. So that's the space which I think is a clear gainer. Cement benefits, but it's end of the day still a commodity, and most of the gains will eventually get completely priced down. And I don't know if a little bit of a price cut would actually spur, I mean, the demand elasticity to price is so high that it'll actually spur volume growth. In consumer durables and automobiles, I think it should spur a volume growth.
Okay, and within equities, if you had to allocate money, since you're saying that the headline may not move too much, between the mid and the small caps, what would your allocation strategy be? There was a time at the start of this year where there's a lot of fear that came in, and we have had a set of challenges on earnings, on geopolitical issues as well, slowing down in terms of economy. If you're allocating fresh money to equities, then what would you break it up into if you put it into three buckets?
So I call it N-1. You can call it large mid caps or small large caps or smaller large caps if you want. I see earnings growth struggle in the top 10, 15 names in the market. The sweet spot is the next 20 or 30. So not exactly Nifty next 50, but excluding the top 10, 12, 15 names within the Nifty, and maybe some of the top names of Nifty next 50 also. So large mid caps and slightly smaller mega caps, because most mega caps I see will find it very difficult to grow earnings in double digits for the next year or two. So that I think is a sweet spot at this point of time, not really small.
Dheeraj, any view on the solar theme in India? I think today we've got an IPO which is opening up, Satwik Green Energy, small one. They're looking to raise close to about 900 crore rupees. Market cap will be about 5,500, 6,000. Not this particular, but broadly, what is the call on the solar theme in India? Because we're seeing a lot of mid caps, small caps emerge from this sector and attracting huge investment.
So a disclaimer right up front, Satwik Solar is an ambit IPO, so obviously I'll be bullish on solar.
Okay, but so you're bullish on the entire theme?
Yeah, I think renewable energy as a theme is here to stay and here to grow. So after many decades, many years, the energy demand or the power demand is on a structural up move, right? Because of data centers, AI consuming a ton of energy. But it's very clear that globally we want more and more renewables as compared to fossil fuel energy. Europe is already at 40%. We want to be at 30-40%. So it's one of those structural growth themes which I think will keep growing for the next 20 or 30 years.
Okay, all right. Good to have you on the show, Dheeraj. Thanks a lot for joining in and filling us in with your take on the markets. Wishing you a good Friday ahead, and we look forward to chatting up with you rather soon. A lot of stocks, though, that are buzzing around from the broader market. So let's get straight to that. Vivek joins us to give us a recap of the news on Ramki Infra. Vivek, take it away.
Well, that's right. Ramki Infra, quite a large order win for the company that has come about. The company has received an order win worth over 2,080 crore. Now, this is from the Hyderabad Metropolitan Water Supply as well as Sewerage Board. The construction period for this particular order is at close to 2 years. The operation and maintenance period that the company will enjoy is close to 10 years. So the total quantum over 2,080 crore. Remember, the order book at the end of Q1 FY26 was at 7,650 crore, indicating that there's a pretty significant chunk of the total order book that the company has received.
Okay, that's Ramki Infra moving up. Vivek, what about JSW Energy?
Well, a quick recap as far as the developments concerning JSW Energy are concerned. Two separate news flow. The company has entered into an agreement with Statkraft IH Holdings that has completely exited their India power plants. The company will acquire 100% equity stake of tie down power generation. Remember, the company has close to 150 megawatt under construction hydropower project. FY25 revenues that the company had was close to 39 crore. Transaction is for an enterprise value of 1,728 crore, indicating that JSW's total portfolio has now exceeded 30.5 gigawatt. Now, also interestingly, the company is acquiring a small business of GE Power India. This is the manufacturing and supply of power boilers. Now, this particular business, it's via a share swap agreement. JSW Energy will issue 10 shares for every 139 shares that GE Power shareholders actually have. So the demerged entity financials constitute close to 5% of the total revenues as far as GE Power is concerned. The rationale mainly is for backward integration as far as JSW Energy is concerned.
Thanks a lot, Vivek, for joining in and filling us in with that take on both Ramki as well as JSW Energy. By the way, don't lose sight of the markets. We need to stop for a bit of a breather, but I think, the markets have now pulled back a little bit. 100 points, par for the course. What's struggling, though, today? One of those indices that are still underperformers for the year is the IT index. In the last 1 month or so, it managed to outperform, but now it's coming for some profit taking. So the tech index is now down close to 0.7%. And Infosys, the big boy in there, that's actually slid to the low point of the day. So I think that's putting some pressure on the index. Let's get to our next management then. We have Mr. Ranjit Rath, the Chairman and Managing Director at Oil India and Chairman at Numaligarh Refinery, who joins us on the show. Hi, sir. Good morning. Thanks a lot for joining in. We've got a lot of questions for you, coming to you in just a bit. For the time being, just highlighting the three broad points we're looking at. FY26 volume growth outlook. That's what we want to know. The GST hike impact on the exploration services, the impact out there. And finally, the impact of the rupee volatility as well is something that we're looking to understand. Well, Mr. Rath, thanks a lot for joining in. Let's get to the first point. When is the Numaligarh refinery expansion expected to come through? I think it was expected in the next few months. You could give us an update out there. And how will it aid GRMs as well as the overall earnings of the company?
Okay. First of all, thank you very much for having me. Good morning to you and all your viewers. We had an excellent AGM yesterday, followed by a press meet. Very happy to be here. Number one, the year just passed by, FY25. We had a landmark year with highest ever production of crude oil and natural gas. That's 6.71 million metric ton oil and oil equivalent. As far as FY26 is concerned, we are looking at about 7.5 million metric ton of oil and oil equivalent. We are looking at a much higher number of drilling. We are looking at a much higher number of exploration acreage and seismic data coverage. As far as Numaligarh is concerned, I must give you an assurance that the expansion is on track. As we speak, the primary units, that is the CDU and the VDU of 6 million metric ton crude throughput, we will start commissioning by December 2025. And the DHT, that is diesel hydrotreating unit, will also be ready, but we need to have the sulfur unit ready first, because I would like to explain that these are all batch basis commissioning and always linked. Therefore, we would start doing the remaining units commissioning by 31st March. By FY 2027, we would be looking at about 40 to 50% capacity utilization and some time of to 28 for complete stabilization of 9 million metric ton. The second question that you had asked, before that, I would also like to say...
Just one more point, sir. So on the Numaligarh refinery, what will be the initial capacity utilization levels, if you could help us out? And when do you hit peak capacity? So we clear that out of the way.
Okay. So currently, the capacity utilization of a 3 million throughput is 100% plus. Last year also, it was 100% plus. And going forward, we are looking at that number also. In addition to that, beyond the Numaligarh refinery expansion, Honorable Prime Minister has already laid the foundation stone of a polypropylene unit. That's another 7,000 crore investment. The basic design is in place, the detailed design is in place, the licensor selection is in place. So we are looking at 28, 29 to complete that as well. That will give us 4 as the index number, they say, petrochemical intensity index. So that's the Numaligarh story.
Okay, got it. All right. So I just want to clear that the longer term targets on both oil as well as on gas, I think you had mentioned around 4 MMT on oil as well as 5 BCM of gas. By when do you hit these levels? If you could break it up for us, sir, between both of them, 26, 27, 28.
So it's like this. 4 million metric ton while you produce crude oil, movement of crude oil or transportation of crude oil is primarily done through the infill lines and then the bowsers, and then you have the trunk line to feed the refineries. The gas piece is contingent upon having a robust evacuation facility. So currently we are doing about 8 million standard cubic meters per day gas evacuation in the regional customers. And we are looking at taking it to 13 million standard cubic meters per day. And that is going to happen by the connectivity of Northeast gas grid. The phase 1 of Northeast gas grid has already reached Numaligarh from Guwahati. GAIL has already connected the mainland India to Northeast by taking the pipeline to Guwahati. We have one dedicated line which is Duliajan to Numaligarh. The capacity expansion is expected by this year end from 1 million standard cubic meter to 2.5 million standard cubic meters per day, which will cater to the Numaligarh refinery expansion post. We also have a fertilizer plant which has come in there through the Namru 4, which is a urea and ammonia plant, 10,600 crore investment. Oil India has got a stake of 18%. Government of Assam has got 40% investment. There also, we are looking at a 0.7 million standard cubic meter per day natural gas supply. Once the Duliajan feeder line gets connected to the mainland pipeline, we will be able to evacuate minimum 5 to 6 million standard cubic meters per day. That will give us the evacuation opportunity. Till such time, we have already strategized our drilling program and we will be prepared to generate or develop or produce 5 BCM of natural gas. As far as crude oil is concerned, we have enhanced our drilling efforts. Our rig counts are going to be 28 to 30 in number. Last year, we had spotted 70 wells, completed 59. This year, our target is to do 80. Basis this, we intend to achieve by this year end 7.5 million metric ton oil and oil equivalent. And going forward, it will be 8.5 with 4 million metric ton of crude oil.
Okay, 7.5 million tons this year, 8.5 million tons the following year.
Absolutely.
Sir, any clarification?
No categorization.
Okay.
This is from the production of our near field exploration efforts, from our mining leases. Should there be any new discovery from our exploration acreages, there will be addition to it.
Got that. Sir, there has also been an increase in the GST from 12% to 18% on exploration services. How big of a cost burden is that going to be for you, and will it impact your bottom line?
It would impact, but it is not much as far as the Oil India's balance sheet is concerned. This year, we are looking at about 300 to 400 crore for that matter.
Will be the impact on the bottom line?
Bottom line, we haven't calculated. We are just waiting to see how our investments will pan out. But the more or less impact is about 400 crore as far as the GST is concerned.
Okay. So because of this additional 400 crore, will there be any change in the kind of investments you would have made otherwise? Will you bring that down?
No. We are a E&P company. We will continue to undertake seismic. That's the data acquisition, processing and interpretation. We will do drilling because without that, nothing happens in terms of our exploration efforts or in terms of our production efforts. So no change in the investment pattern.
Okay. So what's your own expectation of crude prices? Because there's so much pressure on India reducing its purchases of Russian oil. If that were to happen, there is a risk of crude prices moving up. I mean, as you make all these assumptions, what is your base case?
I wish I could predict, but the outlook that we have for ourselves is about $65 per barrel plus or minus. And as we speak today, it is 67. Two things which comes to my mind. The supply side has got a pretty good number while there is a subdued demand. So we are looking forward to a $65 plus or minus per barrel throughout this year.
And plus or minus is what, sir?
We want assurance here. What we have done, realizing or having taken note of this outlook, we have actually initiated a lot of cost optimization processes within the company. Whether it is manpower rationalization, asset utilization, operational efficiency in terms of our productivity, in terms of our drilling efforts, in terms of our workover efforts, the turnaround time of our drilling. So all that has already kick-started.
Right. So what is the potential saving from cost optimization that you're targeting?
I would not like to offer any saving per se, but in terms of physical component, I can give you a perspective. When last year we were doing, say, about 50, 60 number of wells, this year we target to do 80 wells by virtue of optimizing the interlocation movement, the turnaround time of the drilling, and despite undertaking more deeper wells. Similarly, while last year we did about 290 plus workover, this year our target is to do 300 plus workovers, where we would like to do optimum cycle time for our workovers. And that is how we intend to operate. Plus, we will also have a good revenue stream, that is our outlook, from the refinery margin that we witness, which is going strong in case of NRL.
Okay, all right. So, final question before we let you go. ONGC and Oil India, where you all have signed a joint agreement, right, for 3 exploration blocks. Could you tell us what is the share breakup? Point number 1. Point number 2, give us some color on the total investment.
Okay, so it's like this. As part of earlier also, Oil India and ONGC are there together in couple of blocks. And one of them, as we speak, is happening in Bengal, that is onshore. As part of the OLP 9 bidding round, we submitted 9 bids, and all of them Oil India was successful to secure, out of which in one block, Mahanadi Deepwater, we are together 50-50. In one block in Meghalaya, we are together, that's an onshore block, we are together. One block in Cambay Basin onshore, we are together. Otherwise, as part of our portfolio, we have got one standalone block in Cambay Basin onshore, one standalone block in Meghalaya. But more importantly, Oil India has got, as part of its 1.12 lakh square kilometer of area of exploration acreage, 40,000 square kilometer of area in the Mahanadi and KG Basin of deep water and ultra deep water exploration blocks. There, as part of our investment commitment, the onshore blocks are easy. We don't see, because these are all lower depth wells. The commitment will happen as far as the deep and ultra deep water block is concerned. We are going to place the work order for engaging a deep and ultra deep water 2D and 3D seismic survey, which is about 800 crore to start with. Then once we establish the prospectivity, we will undertake about 3 to 4 deep water wells. That's possibly happening year after or year after that, because we require about 12 months to complete the seismic activity, which is going to kickstart from December. So that's the outline.
Thank you very much, sir, for joining in. This was a very comprehensive interview. Thank you for breaking down so many aspects of the company's business model. We will slip into a break on that note. By the way, the markets have corrected now. 100 points lower on the Nifty. We breached 25,400, breached 25,350. And the problem is IT is under pressure. Banks have seen a correction profit booking after 12 good days on the trot, and FMCG too is on the back foot. So all these heavyweight indices are lower today, and that's exerting pressure. Mid-cap index, for now at least, is managing to hold on to the green line. Get into a break. On the other side, Vivek Sharma of Cohance Life Sciences will be joining in to talk about the observations issued by the US FDA and the emerging opportunities in the CDMO business.
Welcome back. Markets down 80, 90 points. Nothing to worry. Par for the course. When you sprint so fast, then you want to cool down a little bit before continuing to sprint, or maybe pause for breath for a little bit. I think that's precisely what's happening. The Nifty Bank has actually been leading the way. That, in fact, is down close to 200 points. The IT index as well is lower. So that's why, in fact, when both the pillars of the market are under some pressure, that explains why we are seeing that the markets are down. But otherwise, in the broader markets, there's plenty of action, mind you. FDC is a stock that's up close to around 7%. I'm not sure whether or not there was a large trade out there, but volumes are larger there. Reddington, another stock that was up, I think, 20% a few sessions ago, that's resumed its winning ways. So that's up as well, close to around 6%. So keep an eye out on that one as well. Reddington, we should get it up for you on the screen. Well, let's get to our next guest then. We have Mr. Vivek Sharma, the Executive Chairman of Cohance Life Sciences, who joins us on the show. Hi, Mr. Sharma. Thanks a lot for joining in, and good to have you on the show. Before I come to you, just highlighting the broad points that we're going to be focusing on for the next few minutes in this interview. The promoter offloaded close to an 8.9% stake in an upsized block deal. So some clarity on that front. The company's response to the US FDA Form 483 with 6 observations. And finally, the broader outlook for the sector, right? What are the opportunities in the CDMO space? So all of this is top of mind. Well, so let's get to the first data point itself. The promoter entity, they went ahead and they sold close to an 8.9% stake. Obviously, they still have a large holding. Give us some clarification on that front. Is there a plan to sell some more? Is there a period that they will not sell? And what is the holding ultimately that they're comfortable with? Please give us some clarity.
No, thanks for having me. Good morning. So yeah, Advent still remains after the sale as our key anchor shareholder. After the sale, they are at 57.5%. The intent of the sale was to broaden the investor base by bringing in top quality institutions. And importantly, Advent has chosen a longer term lock-in, which reflects their stronger conviction in the business. So I would view this as a positive, trend. The strong demand from institution highlights a strong conviction in the business and the management team.
Right. So no more sale is what we are looking at. You're comfortable with that holding as of now. They're done for the time being, right?
So I can comment on their behalf, but that's my understanding. I think, right now they're committed to the business long term. And as I said, we are excited as management team with the broadened shareholder base and excited to work with the Advent team. Yeah.
Okay. All right, Mr. Sharma. I'm going to get an Ekta as well. She's joining in for this interaction. Ekta, take it away.
Yes, absolutely. Mr. Sharma, hi. Good to see you in. The 6 observations that you received for your formulation facility in Hyderabad, I know it doesn't contribute that much in terms of revenue as well as EBITDA as a total. But what is the nature of the observations? When do you expect a resolution for this particular facility?
Sure, Ekta. Hi, good morning. So a few things. Yes, we did receive 6 observations. We had 2 US FDA inspections actually in the last few months. One of them we received 6 observations. The other one was also on our API site in Jagiapet, where we received 0 observations. On the one that you are referring to, there were 6 observations. This is a site that produces drug products. And yes, as you mentioned, the revenue contribution from this site is less than 2%. EBITDA contribution is less than 1% of our total revenue. This was our first inspection actually under the Cohance ownership of a US FDA. The nature of observation is around some material management controls, some cleaning procedures, and some internal processes. As a company, we are committed to the highest level of quality standards, highest level of processes, and we have started working on the remediation of those actions. While we are doing internal processes optimization, internal processes things, we have also retained services of a US FDA accredited agency to help us with those cleaning up processes. We have sent a response to US FDA as per US FDA guidelines, and there is a timeline that within which they are supposed to respond. While we're waiting for the response, everything that we need to do, we have started working with proper procedure control and help from some external resources.
Okay, all right. So we don't expect too much of a concern from this particular formulation facility in terms of escalation. Just wanted to focus on the opportunities which are emerging in the CDMO space. And one of the key things that I wanted to talk about was the US Biosecure Act. We understand that it is back under consideration in the US. It might be a more watered down version from what existed before. But the fact is that there could be an opportunity which could then re-emerge for Indian CDMOs or, CDMOs ex of China. Just give us a sense in terms of what kind of opportunity are you anticipating? And is that already playing out with regards to China Plus One for you?
Right. So listen, as a company, I have said this in the past, as India, I'm very excited and, very optimistic about India's potential in the CDMO space. I think India has a lot to gain and India will continue to evolve and continue to grow. That's my own projection. From a Biosecure Act perspective, the act was being put on the floor, I think December last year. It did not pass. Now it is being pushed again. Generally, my observation, meeting with customers, meeting with other key holders, is that listen, the damage is done. People are looking at as an alternate to really have a backup and then move out of China if that is part of their supply chain. We are seeing improvement and we are seeing RFPs that are coming now that were not there before, and they're in larger quantities, compared to what it used to be before. We are seeing more visits from customer to evaluate our sites and capabilities. So trend-wise, I am seeing traction there. In pharma, it's a very sticky supply chain. It takes time for it to materialize. I can also tell you in my interactions with customers in the US and other places, depending on company's strategy, there are companies that have a China-free strategy. So people are looking for opportunities to really de-risk their supply chain from China wherever it makes sense, and we are seeing traction in that space.
So you have spoken about the RFPs or the request for proposals as well as the site visits which have taken place. You've, spoken to your shareholders about that in the past couple of quarters. So give us a sense in terms of how much of these RFPs have actually converted into business for you all when it does come to the CDMO China Plus One opportunity.
Right. So, yes, there have been some RFPs that are converted, but we have a large number of them that decision is pending. It's a complex process when an RFP is involved in a phase 3 and a commercial product. It takes a long time to understand, to really work on it, to price it, to share with them and for them. So that process is going on. I want to just give you an example. One very large pharma company has given us RFPs 3 times in the last 45 days. The first batch of RFP, we have submitted the prices. They are evaluated. They have come back with some negotiation. We are discussing with them. The second batch, we are working on submitting. The third batch just came in last week. So even the first batch that was submitted more than 40 days ago or something like that, we have not heard back. They are still internalizing, evaluating. So it does take time. I'm very optimistic that the fact that they are evaluating and there are more RFPs coming, we will see traction from there. So it's all moving in positive direction.
Okay, so you've had one innovator company reach out to you in the past 45 days for 3 RFPs.
More than 3 times. First time it was and I don't want to give the numbers yet. It was a much higher number of RFPs, but it has come in 3 different batches, 3 different instances.
Okay. Is this for the ADC opportunity?
all of this, and the one that I'm talking about is non-ADC. This is small molecule, but they are phase 3 and commercial products.
Okay, but ADC itself, anti-drug conjugates, which is basically a type of cancer therapy, it is expected to be the big opportunity for you all and for the market itself, $4 billion by, say, 2029, 2030. So give us a sense in terms of the kind of opportunity you are seeing from ADCs.
Yeah, sure. So yes, you're right. ADC is a big driver of growth for pharma services, including us. And we have 2 sites, one in Nacharam in Hyderabad, where we provide commercial payload to commercial customers in the West and in Asia, and then the NJ Bio site, which does early stage, linker conjugation. So we are seeing significant traction there. This is all at discussion stage at our Nacharam site, where we are talking to other customers which are working with on some early stage products. So existing customer is looking to extend the therapies, and if they expand, then we will see traction there. New customers are working on early stage projects based on our camptothecin-based technology, and if they progress, we should see traction.
Okay,
in NJ Bio, in New Jersey, we have committed capital to expand our capacity there. That was publicly announced, and we have been talking, and we have actually received the first order for an integrated linker, payload, and conjugation RFP there, project that is being worked on by the team in NJ Bio. So there is traction there, and directionally it's moving in the right direction.
Okay, and just quickly then, what does this mean for guidance? Because you have that FY26, you will see acceleration. So put a number to that in terms of growth. And then eventually your $1 billion target and say eventually 30% margins.
Yeah, so listen, we remain committed to the 1 billion, 30% margin in 5 years, 2030. And that's the only guidance I will give you at the time. Otherwise, we continue to remain focused on delivering the commitments that we have made to our customers and delivering that long-term guidance that we have shared with everyone.
Got that, Vivek. Thank you very much. I just want one thing. Those 3 RFPs that you earlier said, is that in relation to, the US government signed an executive order asking federal authorities to stockpile critical APIs for 6 months. So do you think this is because of that?
So first of all, it's not 3 RFPs. We got RFPs in 3 different batches. The number is way higher than 3.
Okay.
It came in 3 batches. Just to give you an example, this is supply chain de-risking RFPs, very clear. They are working with other providers in other geographies, and they are evaluating companies like us to really partner with them.
So this is new stuff in that sense.
That's exactly right. This is new stuff in that sense.
All right, okay. I just wanted to clarify because if this is that 6-month thing which got a bunch of people excited, but this is much better in the sense it's diversification and it's kind of sort of new customers in that sense. Thank you very much. A bunch of more questions, but out of time, and I hope you come back on this channel and program, and we'll chat more. Thank you.
Thanks for having me. Thank you very much.
Okay, well, I think we'll just run you through what markets are doing. And Vinay Rajani is with us, Senior Technical Analyst and Derivative Analyst at HDFC Securities. Vinay, what do you have and how would you trade things now?
Yeah, good morning. So today is looking like a profit booking day. Yesterday, there was a formation of hanging man candlestick pattern on the daily chart of Nifty as well as the Bank Nifty. So basically, it is a sign of possibility of a profit booking in overall uptrend. So positional trend has been up and we have been bullish, but we could see some sort of profit booking in overall uptrend because yesterday we saw there was a depreciation in rupee and rupee has resumed its overall downtrend. So there rupee has been giving an advance signal to the equity markets in the recent past, and that is repeating again. So that can give some profit booking sign in the Nifty as well. So there is a strong support around 25,200 to 25,250, which can be utilized to go long. But as of now, for today, it might happen that we may see a profit booking in today's session. And overall, we have already seen out of last 14 session, 12 session has been positive. So we cannot rule out the possibility of the profit booking in the benchmark indices. But as far as broader market is concerned, I am expecting a continuation of participation in the broader markets because only 69% of the NSE 500 stocks are still above the 200 DMA, which is not overbought yet. So there is no extreme case as far as broader market is concerned. There has been a gradual improvement in the broader market. So there is no euphoric sign in the broader market. Buyer dips should be bought into. And as far as Nifty is concerned, 25,200, 250 is a zone where one can initiate again long and definitely we can expect a level of 25, 500, 550 in the coming days. So today is a profit booking day. Wait for a dip to come, and support is around 25,200 to 25,250.
Okay, all right. Specific stocks, Vinay?
Yeah, so basically, I continue to see strength in metal stocks. So NMDC is a stock which I like on the chart. So it is into a continuation of an uptrend, and continuous outperformance is there. So around 77.50, one can initiate longer in NMDC. I would suggest a trading stop loss at 76. On the upside, I'm expecting an immediate target at 80. The second pick I would take from the auto ancillary space, Subros. So yesterday there was a nice breakout and clear-cut resumption of an uptrend. So Subros is looking good around 1028, 1030. I would suggest a stop loss at 1000. On the upside, I am expecting an immediate target around 1080. So these are the two stocks I would trade with the mentioned stop loss.
Absolutely. Vinay, good to get that. Thank you very much for joining us with that. I just want to play out an interesting piece of the conversation. So I spoke with Jairam Sridharan. He's, of course, the head of Piramal Finance and this large NBFC. And Jairam made an interesting point. He said that lower-end customers are not doing nearly as well as the average picture looks like. I mean, so the baseline for NBFCs is looking all good, but that's extremely skewed. So this is Piramal's MD, Jairam Sridharan. This was at the sidelines of the Banking Transformation Summit that happened just a few days ago. He also actually highlights on the MFI side, microfinance side, actually a new cycle has started, and it's the up cycle. Listen in.
What we are seeing is an environment in which the lowest end of the customer is not doing nearly as well as the average picture looks like. So you can look at India's average numbers on anything, and much of it looks like it's all trending upwards, but unfortunately, it doesn't seem to be evenly distributed. And at the lowest end, you find not as much growth, not as much sort of prosperity, not as much ability to lever themselves. If you look, for example, at housing loans, you see that at the top end of the spectrum, things are looking pretty nice. I mean, there's enough growth, and you have all these news stories of this project was opened and the average ticket size is 10 crore and was sold off in 2 hours or whatever. Like, you hear all these stories, but at the same time, you see at the lowest end, you see kind of the less than 20 lakh, less than 25 lakh rupee kind of housing loan market. It's degrowing. It has been degrowing for a year and a half now. Second piece, the second example I'd give you is, this was for individuals. The same is happening in companies. In companies, the largest companies are doing remarkably well in terms of borrowing. Not necessarily in terms of growth and profitability, but certainly in terms of delevering themselves, balance sheet strength. They're doing remarkably well. But the smallest companies are really struggling in terms of balance sheet strength. In many ways, this is the MFI sector growing up. It's the first big cycle in the post-deregulation era after RBI kind of changed all their rules and made the sector kind of let the sector go in 2022. This is the kid going to college for the first time and kind of having way too many drinks and having a massive hangover. So it's a coming of age thing for the sector. So the sector has reacted really well. I agree with the point that Sudipta is making that kind of new business, particularly post Diwali of last year, new business that has been booked is looking actually very, very good in the sector. And this is a sector in which old business runs off very quickly and new business starts to dominate. So I think certainly if I were a betting man, I would say we are at the beginning of an MFI cycle, not at the end of the previous one.
Okay, interesting takeaways coming in from the Piramal management there at the start of an MFI cycle and not at the end of one. We need to take a short break on that note, but Manisha Gupta will join in. She'll be focusing on the commodity space. Stay tuned. Welcome back. Well, a little bit of profit booking for the markets. So the Nifty is down around 100 odd points. We have the Bank Nifty, which is under pressure as well, so down around 0.4%. Remember, it's been a couple of good days for the Bank Nifty, so now seeing some amount of profit booking. But let's shift focus now to the commodities market. Manisha is here with us. Manisha, over to you. Which is the metal that you're tracking today?
Well, I'm looking at aluminum, and that is because in the near term, when you look at the last 1 week, 1 month, even 3 months for that matter, this one has been an outperformer. We have seen prices gain up by 5%. It's not too far away from its 2022 highs as we speak. And aluminum clearly from a surplus commodity seems to be getting into a deficit one, and that clearly would support commodity going forward. But let me tell you, we are trading at around $2,700 a ton, and most of the banks and brokerages are calling aluminum at $3,000 by the end of this year as an average. There are 3 or 4 factors that you need to keep an eye on. First one really is about tariffs. Remember, there is a global 50% US tariffs on aluminum imports, and much of that really comes in from Canada. So we are looking at Canada actually moving away from US to other markets. And if you look at the overall numbers, in the first quarter, the aluminum exports from Canada to US were at around 95%, which has declined to 78%, with an expectation that you could be looking at lower numbers as we move ahead in the year there. The second thing clearly has to be about China. Remember, nearly 60% of global production and much of that consumption as well now comes in from China. Interestingly, China has moved into this space very, very gradually. So when you look at these numbers, Chinese production in 2002 was just about 4 million ton. Fast forward to 2024, China now produces 43 million tons. So China basically knew where to get in, and we have seen Chinese investments in smelters outside China as well. So China clearly playing that big game there. Also, when you look at the Chinese exports, that were at a record high as well in last year at 6.7 million tons. China has interestingly put a production cap at around 45 million tons. The capacities are much higher, but with China now calling it cap at 45 is one of the factors that you have seen support come in for aluminum. The other has to be about Russia, one of the major players yet again in aluminum, and the metal produced after April 2024 cannot be delivered on London Metal Exchange has been the sanction that has been put on Russia. Having said that, we do understand that a lot of metal is still coming out from Russia. But the second factor, the point that you should look at, is the LME inventories itself. Now, the markets take a lot of sense and sentiment from this one, and this is what we are working with. In 2021, aluminum stock was at 3 million tons, much higher, and we did not see the prices outperform. And then you come to 2024, the inventories fell to 1 million ton. This year has been interesting. We've seen inventories not just below 1 million tons, but constant decline as well. In the month of May, it was at 700,000 tons. Right now at 375,000 tons. Markets are taking a lot of cue from that. Is the reason there are very less sellers into this and buyers aplenty. Now, when you talk about the new aluminum smelters as well, and this is a report coming in from Indonesia, that you could be looking at 7 million tons of capacity by 2030. But remember, aluminum is a very power-hungry as a metal, and with power being fought between AIs and energy transitions and various other sectors as well, captive energy is something that Indonesia perhaps will not be able to work out with, and that is the reason markets are slightly sarcastic. So this is an area that could continue to be bullish going forward.
Manisha, thank you very much for that. So those are commodity cues coming through. Reddington stock at the bottom of the screen on the back of that iPhone 17 appearing in stores. So interesting one, and we'll have more a little later. We'll take there you go, 9% higher. We'll take a break. On the other side is our special segment. It's the economy. Lata in conversation with Priyankar Biswas of JM Financial Institutional Securities and PP Gupta, CMD of Techno Electric and Engineering, on the state of construction companies post the GST cut.